and Brazil are on fire. One, quite literally. It's time to go digging for value. I'm Allison Southwick. Thanks for joining us today. Today I've got Taylor Muckerman and Joel South, energy and materials analysts here at the Motley Fool. Our top story, the Wall Street Journal is reporting that Pemex has called in U.S. well fire experts to help put out a fire that, while being described as out of control, the good news is that no one was injured, the fire was contained, and it shouldn't explode.
Thank goodness.
So so it's good. So it's good news. It's bad news because things are on fire, and that's never generally good unless you're cooking. I don't know.
I guess so.
Anyway,
Sometimes.
so they are estimating.
Happens with me a lot.
Depends on what you're cooking.
Yeah, that's true too. They are estimating that it could be until December that they contain the fire. How important is this particular well to Pemex's production?
The well itself is not important at all. The story here is basically looking at what they're doing and the type of expertise that they're needing. They're going outside of Pemex's expertise, looking towards the United States to bring help in to really control the well. And yes, it is going to be burning for a number of weeks into December, like you said, and a lot of that is they don't want to build up of natural gas sitting around there and building a cloud. So they're getting expertise from outside and bringing it into the country.
So while we shouldn't be concerned, I guess, initially about like the output hit that this is going to deliver to Pemex, is there anything generally that this fire can teach us?
Yeah, I think it's very important because you're seeing Pemex go outside of the country and bring more help in. And with the new president that's coming in, they're really opening up Pemex to foreign companies. And I think that is very important because if you look at the country right now, in 2004, their production was around 4 million barrels a day. It's down to 2.5 million barrels a day, so they need help. They're losing money. The country's subsidizing the industry at a tune of upwards of $8 billion a year. So by having people come in, foreign firms, they need that technology. They need that inflow of money to really expand what they're doing down there and really get more oil than they're actually getting right now. And some estimates are, if you get bigger companies like an ExxonMobil, Chevron, down there with a lot of our service companies, they could almost triple the proven reserves that are down there. So, big winners here, I would look at a lot of the big rig companies like a Noble Corp or a Transocean. They already have contracts with Pemex. If more oil companies, foreign oil companies come down there and bring that contracts, they can extend those in that area where there's still a lot of oil. I also look at a Schlumberger or Halliburton. A lot of their services will be needed down there as they try to build up a lot of the oil and natural gas that's in the country. So I think the biggest takeaway here is they're finally moving that direction. This is just one more example that they need foreign technology in the country to really help them out.
All right, Reuters today has posted a very ominous or awesome headline today. It depends on which side of the fracking debate you are on. Title, Fracking is Coming to California. Ooh. So you're happy about this. So California is obviously a very environmentally conscious state.
Sure, of course.
So it's been interesting to see lawmakers there try to balance activists and commerce. So what kind of a timeline are we looking at here before fracking really gets up and going in the state?
Yeah, they do have to kind of tiptoe a very fine line between activists and the industry. So basically what you've seen so far is in September, they announced fracking will come to California, like you mentioned, but to kind of appease the environmentalists, the governor said that 18 months he's going to allow for a study to be taking place to see, the health and safety precautions that companies need to take in California specifically. So you're looking at about a year and a half. They'll probably have some people get in there and do some test wells, but I think at least 18 months before you start to see some meaningful development there.
So what kind of producer could California be? How much are they sitting on over there?
Well, if you look at the Monterey Shale, it's talking about more so shale oil than shale natural gas. So you're talking about up to 15.4 billion barrels of potential recoverable reserves, which is a huge play. Puts it right at the top of, not the top, but in the top plays in the world. And you're looking at, so a lot of companies here, as far as refineries, are really going to benefit from this if you can develop it, because there's not too much infrastructure as far as pipelines and rails to bring crude oil to the state of California. And they also have very unique gasoline requirements. So the refineries there really go through a lot of higher cost structures than other refineries in the country. So if they can bring this online and inside the state, I think they're going to see a huge advantage for these refiners. Obviously, that's way further down the line than just 18 months, but it's something really nice to look forward to.
Right, so refiners are something to watch. Is there any other advice for investors when you think about California?
If you get some liquefied natural gas exports approved there, that could be a great market because this isn't strictly crude oil that you're talking about. I don't know any companies that would try to get in there, but we've already had some East Coast and Gulf Coast export terminals approved. So who knows, maybe if this is as big as people expect, you could see a West Coast terminal maybe ship a little bit easier and more cost effectively to the Asian markets.
All right, so let's move on then. As we learned from their third quarter earnings report, Southern Company continues to be plagued by their clean coal project in Kemper County, Mississippi. Joel, can you give us a quick history on this project?
Yeah, basically what they're trying to do is really be ahead of the curve and bring a cleaner way to generate power with coal. Southern Company has been really leading this charge, and what they wanted was a way to save the coal industry. And this last quarter, their earnings were down 12% because this project that they have online that you just mentioned is going over cost and it's running over time. It was supposed to be finished early 2014. It's pushed back to the end of 2014. You're also seeing shareholders basically paying up another $1 billion for the project. So it does hurt. They are trying to do a pretty noble thing, go out there and save the coal industry. Yep. It could help them, but as you see with that or nuclear projects, if it's really too expensive, people are just going to cut it and go with another cheaper source, especially with natural gas prices staying low. That could be a better option instead of going through these projects.
All right, so talking about them as kind of a first mover here, then it sounds like if the costs for this continue to just balloon out of control, it could be really bad news for clean coal energy in general.
It could be bad news for the thermal coal companies in general, companies like Arch Coal or James River Coal Company. And the reason that is they really need a lot of these projects, especially with a lot of regulations that could potentially come down the line. There's a lot of talk about that. People are wondering if it's going to be, if the coal industry can really outlast that, especially the thermal coal companies that are looking for the power generation, not the ones that are the met coal companies that are in for steel, helping steel companies. So basically what they need is more of these clean projects, because if the regulations do come down, people will move to natural gas. It's just not going to be cost effective to be in that industry. So they need utilities like Southern to build these projects, but with a lot of the overruns, if this continues to go forward, this could really hurt a lot of the thermal coal companies.
Yep.
All right, let's look at our last story for today.
Okay.
RigZone is reporting on comments made by the president of Petrobras, Maria de Graças Foster, believes that their oil and gas production will more than double from 2.2 to 5.7 million barrels a day by 2020.
Yep.
Taylor, why do they think they can hit this target?
Well, because they plan on spending $237 billion to do it. So hopefully they hit these targets, because that's a lot of money. And this is one company doing it, really. This is a state-run oil company that investors can get a piece of. It's been a little frustrating for investors lately because of that government intervention, helping with the price controls for gasoline being sold in the country. Also, they require most of the machinery used to be developed inside the country. So it's very inefficient on the cost side. And they're having to import higher-priced oil in order to turn this into gasoline that they then sell at subdued prices. So hopefully for investors and the country of Brazil, they can get to this level. Still way behind the United States and some other bigger countries, but over 5 million barrels a day isn't something to really bat an eye at.
So 2020 is 6 years away.
Right.
What should investors be keeping an eye on that'll tell them if they really are on pace to meet that target?
Well, right off the bat, you're going to look at how they start to develop the Libra field with companies like Royal Dutch Shell and Total, and a couple other Chinese companies that just bid as a consortium on that auction earlier this month. So I'm looking at how that takes place over the next couple years. Then you get to 2017. They hope to add 750,000 barrels a day to their current 2.2. So they should be near that 3 million barrels a day mark by 2017. If not, investors should get a little bit worried. If they're at that mark or above it, I think they could even go a little bit higher than they're expecting. So I think 2017 is where they've set kind of a medium-term mark on this goal, and that's what investors should really pay attention to.
All right, circle the date.
Yep, I guess so.
or the year, I guess. All right, now it's time to take a look at some stocks that are popping and dropping. Joel, what have you got for us today?
I'm looking at Carbo Ceramics. This is a company that was beat down quite a bit, especially when you saw North American fracking, just the industry overall. It was a little oversupplied. This is one of the companies that was hit. However, they had earnings, really had a big surprise. Their EPS, compared to what analysts were expecting, surprised by 60%. Their revenue is up 33% year over year. The big story here is the ceramic proppant that they have in North America, or their sales overall were up 48%. In North America, which we mentioned was oversupplied, was up 63%. So that was really what drove this company so much higher today. And this is very interesting. What you're seeing is a lot more plays in North America like the Bakken. You're seeing companies like Halcon and Kodiak Oil and Gas, smaller players that use only ceramic proppants in that play because they're getting so much better yields in those areas. So that we knew going into this that the Bakken and those companies were focused only on that proppant, but we're also seeing the Eagle Ford and the Permian Basin really grow. Companies in those areas really grow. Some of the big players that Carbo supplies also started increasing their production in North America, so you're seeing a lot more sales there. So great news all around. They're back to where they were a few years ago when a lot of people were going and starting that whole fracking revolution. So good news for Carbo, up 34% last time I checked, so good day for them.
Yeah. All right, Taylor, how about you?
I'm looking at Silver Wheaton down big today. I think one of the big reasons why is more trouble with Barrick Mines' Pascua Lima mine. They're supposedly providing them Silver Wheaton with gold and silver from this mine once it comes online, but now they've pushed their deal back to 2017. It's already been pushed back from 2015 to 2016, so this adds a whole nother year onto the expected production. And what sets Silver Wheaton apart from a lot of other miners is they've kind of alleviated themselves from any mining specific risks as far as accidents or Mother Nature coming in line and really bumping down production estimates. But they have supply issues now because they rely on other miners to provide their gold and silver streams to them. So this is a big mine. A lot of people have been waiting for it to come online, Silver Wheaton in particular. So if any more delays, you could see this contract become null and void.
All right. Well, if you are looking for more investing analysis or even just investing ideas in energy, you'll want to check out our special report. It's called 3 Stocks for America's Next Energy Boom. Boom.
Boom.
Just get a copy of it by emailing us at oilboom@fool.com. You can also follow us on Twitter at TMF Energy. Send us your questions, comments, anything you want.
Well, not everything.
And you'll get some good analysis on there too. Good articles.
Yeah, everyone wins.
Everyone wins.
For Taylor and Joel, I'm Allison Southwick. Thanks for watching.